Good morning, good morning. How's it going, everybody? Nice to have you back. Yes, it's nice to be back. I was away recently, as you guys probably know. I posted last week that I'll be away for about a week, going to Vegas. And I sure went to Vegas. Got to see Vegas for the first time ever. I know. I should have been able to visit Vegas already at this time in my life, but hey, I had other things to do, including working and learning how the markets actually work. So Vegas was cool. We played. We lost. We didn't make it to the finals. There was like 800 and something teams. It was crazy, but it was a lot of fun. I got a chance to actually see Vegas, see the billboards, see the hotels, see the craziness. Got a hat, no tattoos, so that's a good sign. And it was great. It was a good experience. I really enjoyed it. And so now back in the saddle. So we got a lot of good stuff coming out. A lot of good things happening in the market. We have, first of all, we have inflation data coming out. Everybody's watching for that. Is it going to be up? Is it going to be down? What's going to happen with the market? It doesn't matter. Okay? It doesn't matter. Forget about the inflation data. Okay? There's going to be moves in the market, yes, but it's all based on what's already in play. All right? The data is not going to produce any type of movement that's not expected. All right? So regardless of whether inflation is down or if it's higher, there may be a jerky move initially. But the key thing that we want to remember is that price is going to continue doing what it's already in play. Okay, what's already in play. So, so what is in play? Well, let's take a look at the gold chart. This is a daily chart of gold, and we've had a range here. As you can see, we were talking about this range last week. If you remember, we had supply here. And we had demand below. And I said, let's watch to see what happens with the break of this range, either to the upside or to the downside. So as you can see, we got a break to the upside, which created some demand here, some buying. But when price dropped to that area, I wasn't interested in buying because of the dynamics of the markets. And so we weren't really focused on that area of buying. We wanted to see what was going to happen as price unfolded. So they removed that area. We have supply up here now. Price rallied up into that supply, contacted it, dropped, rallied back up into that supply, contacted it, and it's still holding. So that is the circumstance with gold. We have supply that was recently formed, price rallied up into it, and it's still holding. Okay? Now, let's show you something really important here. Let's go over to the euro. So I saw some people shorting the euro. I said, a bad idea, bad idea, because the pressure is to the upside. All right. The pressure on price was to the upside. So we had this area of supply here. Okay. Just like gold had some supply that was holding price down and it broke to the upside. Right here, we have supply, and it is breaking to the upside, as you can see. So pressure right now is upwards. Now, I heard some numbers being floated around when it comes to a sentiment, retail sentiment. So this could play a role in here. Let me do a screenshot and show you where we're at. So retail sentiment right now, they're massively short. Why are they short? Well, I'm not quite sure why they decided to short, because pressure was bullish. But here are some numbers that we need to pay attention to, okay? Take a look at this. So right now, retail traders are 91% short. 91% of all their exposure on the euro is the short side. By how many? 61,000 lots. That's pretty aggressive, okay? That's pretty aggressive. So keep this in mind when the data is released, okay? Because retail traders have been lured into shorting the euro. They have a massive short. Sooner or later, they're going to have to bail on that position. So if the figure comes up higher, If inflation is higher than previous, that's going to be considered to be bullish for the dollar, which would be considered bearish for the euro. So the retail traders are already bearish, okay? So that's what they're kind of hoping for. They're kind of hoping for a number that's larger so that their position starts to drop and they start becoming profitable in this trade. Because right now they're not profitable. All this time while price was rallying up, they've been shorting. So they're underwater right now. So could there be an initial drop? Could the number be larger and then there's an initial drop, luring more retail traders into shorts, and then eventually price breaks to the upside and heads higher? And then that's left with retail traders thinking, what the hell just happened? Yeah, it's very possible. Why? Well, because when we look at the dynamics of what's in play on the chart, the supply and demand coming in from the big institutions, the latest thing that they did was remove a selling area. So if they're removing a selling area, that means they are buying. So right now the institutions are buying and the retail traders are selling. That's the dynamic. So when we're talking about what's the bias of price and the momentum of price going forward, it's upwards right now. It's upwards, okay? Now, if the data comes out and it's below, that'll be considered negative for the US dollar and will be positive for the euro. So what's going to happen? Could that trigger a massive bailout of these short positions, and over the rest of the day, maybe the following day, tomorrow, we'll see them offloading their shorts and piling into longs? Is that possible? That's also possible. So there's a couple different scenarios, obviously, that can play out here. The key thing to remember is, if I'm going to trade a chart, I want to be trading alongside with the institutions. And the pressure is to the upside based on the supply and demand dynamics. When we study the CFTC data, do we see them accumulating a massive long position? No, that's not what's happening. And so let me bring up the latest data. I hope you guys remember this, because this stuff is pivotal information, okay? So let's take a look at the latest set of data and see what the institutions have been doing with their positions. So let me bring up my spreadsheet that I track all the data on. And let's wait for it to load. There we go. Let's go over to the euro. What do we see? All right, look at the euro, okay? Let me do a snapshot of the positions here so you can take a good look here. Here is the non-commercial numbers that we want to pay attention to. Here we go. Here's non-commercial. What do you see there? Okay, so if you look at net positions, you can see that clearly it's in the green, meaning that net positions are bullish. But look at the coloration of the cells here. Remember I was pointing this out to you? Why do you think I point these things out? It's because it's vital for you to know this. The sentiment right now with the banks is that they are neutral with their positions, okay? So longs 185, shorts 152. Yes, longs are bigger, but within what context? They've been increasing their longs, taking profits on them. Increasing their longs, taking profits on them. The latest cycle within the overall picture here since March is increasing longs, okay? Then you get price action moving to the upside. We see on July 23rd, they had 188. They took some profits. And then from July 30th to August 6th, they added back to their long positions. And now you see price rallying up through this area of supply, okay? Could this be a setup leading into inflation numbers? Anything is possible. But the key thing to remember here is, if you want to trade something, do it alongside the institutions. We saw the bullish pressure coming into the markets. We knew it wasn't a good idea to be going in short. Retail traders were piling into short positions, and now they're stuck. Retail is stuck with shorts. So do you want to short? No, now's not the time to be shorting. Could price drop? Yes, it could drop. It would only drop if retail traders start bailing on their short positions and start piling into long positions. So best thing going forward, in my opinion, is watch to see what the number is. Watch to see what the reaction will be. Keep an eye on the data, the retail sentiment. Keep an eye on that number. What is it? myfxbook.com. Click on sentiment or Outlook. I think it's Outlook. Let me double check. Click on sentiment at the top and keep an eye on those numbers. Don't rush into any trades right now. Not a good idea. But the signs are definitely that price can go higher based on the supply and demand dynamics. Okay. All right. So I will leave you with that, and I'm going to do a members only video right now. I'm going to continue on with this session for another 10-15 minutes. I'm going to cover some more markets. I'm going to cover more in depth with gold. We're going to take a look at the dollar, and we're going to look at the lower time frames of the euro to see if there's any potential for a trading opportunity as things progress with the data. Okay, and then we'll look at Bitcoin briefly because that's been doing some moves. We'll look at silver as well because it's tied in with gold, and yeah, we'll do a little bit more in-depth analysis on the charts and give some more insight. If you want access to this exclusive video, go to our X page or Twitter page, like the post that I made for this session today that I'm doing for free for you guys, and I will choose somebody later today and give you access to the exclusive session. All right, ladies and gents, that's it. Thanks for joining me. I appreciate it. And we will end the session there. Continue with the members. Thanks. Take care. Have a good one.